On a Monday, let's kick things off with the trade by introducing Dewey Strickler of AgWatch Market Advisors. He is based out of Franklin, Kentucky. And Dewey, let's dive right into our first trades on the grain. Let's start with the corn market and see if we're going to get any enthusiasm one way or the other today. Right now on the corn, you have that nearby May contract showing a last trade of 378 1/4. Oh boy, Dewey, it's unchanged. We have December. Unchanged. It's right at $4. Hasn't done anything yet this morning. It's been sleepy all night long. Now let's take a look at the soybean trade. Which way is it going this morning? On the May, well, we're a penny and a quarter higher at 9.05. It's even quieter than what it was overnight. Overnight, it was about 2 cents higher. November soybeans now a penny higher at 938.5. I will add at this point, I checked and I did not see any overnight export sales of anything. So I'll throw that in there. Now looking at the wheat, let's take a look at Chicago first of all, where we have the May contract a penny and a quarter higher at 467 1/4. July new crop up 2. In Kansas City, you have the May contract showing a last trade of 445 1/4. That's just 1 tick higher, 1/4 of a cent higher. July also 1 tick higher at 453 3/4. And on the Minneapolis wheat market, we have the May contract now down a penny and a quarter at 571. July down 2.5 at 568 1/4. In the cotton market, this is how we're opening up today. We have the May contract 1 point higher at 76.59 a pound in December, 14 points higher at 75.44 cents per pound. Dewey, so far it appears to be a very exciting yawn fest.
Yeah, that's true, but you know, that very likely may start to change here, especially in the corn market. You know, I've mentioned the past couple of weeks about the funds have had a pretty substantial short position in the corn, and this one just really gets up and stands in your face here. They're short about 1.3 billion bushels. We're going into the growing season. I figured up in the last commitment of traders report, about 370 million bushels of those positions are underwater. Now, when they start to cover, they could cover here in a very big way. It will very likely pull wheat up with it, which we have about a short position of 535 million in that. That's a pretty substantial position. So we could see some fireworks get underway. It may not happen, though, until after the planning intentions report.
So do you think that's kind of similar to the action that we saw maybe in the wheat and maybe to a greater extent in the hogs as well, where the funds are all loaded up on one side there?
Yeah, that's true, and funds are all loaded up on the long side on cattle here as well, too. So I would expect to see cattle come under some pressure here as well. You got to look to see what the professional traders are doing.
However, is the South American harvest going to keep a lid on the corn and soybeans for now?
Oh, it probably will on beans more than anything else. I think as far as the corn is concerned, you know, we've got the planting intentions report will be out, but, you know, it may be just basically a yawner when people just, you know, look and see, you know, how much flooding we've had since these data was collected. This report may be old news when it comes out.
Absolutely. All right, Dewey, we'll come back in a moment and we'll open up our livestock trade as well. We'll see which way the cattle and the hogs are going to go on a Monday when we come back after these messages. Let's go ahead and see how the livestock trade is getting underway today. We start with our live cattle board, and on the live cattle in Chicago, wow, a lot of pressure here. I'm seeing triple-digit losses all across the board. April down $1.13 at 128.60, and you have the June live cattle down $1.55 at 121.95. Now you have the August contract down $1.35 at 118.67. However, I will note that I noticed the trade is closer to our highs of the day than it is the lows. So yeah, it's triple-digit losses, but not as bad as it was on the open. Now let's take a look at the feeder cattle market here this morning. We have the March contract down 28 cents, but, I mean, we're about at the end of March. The April contract down $1.33 this morning at 147.47, and we have the May contract down $2.03 at 152.03. August down $1.67, and keep that in mind here on the feeder cattle market because we're going to talk about that in a second. Now, on the lean hogs, currently on the lean hog trade this morning, let's see how we're opening up. They are going the other way with the April up 58 cents at 78.90, and we have the May contract down 7 at 87.10. And you have June 75 higher. In fact, they're all basically 70 to 90 higher, except for the May. That one is only 7 higher all by itself. Back to the cattle side here, and we're talking with Dewey Strickler of AgWatch Market Advisors. Dewey, the placements number that came out in that cattle on feed report last Friday afternoon really surprised quite a few folks when the trade was looking for a reduction in placements from a year ago, and it came in at 102%. That was 6 points higher than the average trade guess there. How much is that going to weigh on the market, and does that, in your opinion, make the market look kind of toppy right now?
Definitely looks somewhat toppy here. I think from here on out, when we look at the cattle market, Marlon, I could see it possibly going up and setting a new high here unless we drop below last week's low of 126.35 in the April. But I do think if we make a new high, it's going to be pulled up by the pork. Really nothing else, because these numbers, and when you look at the storage numbers, they came out just a bit higher than what they were a year ago. So, I mean, we're starting to see, these storage numbers pick up here a little bit. And when you look at the chicken is the one that wins out because it was down 2.8% in storage.
Okay, now on the feeder cattle side, we did see the decreases on the futures trade here this morning, over $2 lower on that one contract. I know. Is that something that you expect to see more of moving forward? I mean, we had a lot of calf losses here with that bomb cyclone the last few weeks.
Yeah, we did. But, if the cattle markets start to peak out, your feeders are going to do that as well, too. When you look at the feeder cattle, I mean, we just broke out on the upside here recently out of a broad trading range. I don't know we're going to go a whole lot higher. We had the April contract, got up last week to 150.80, and you got a lot of resistance up here at 151, 151.5.
Now, in the lean hogs, of course, they went parabolic on their chart here, just almost straight up in about a 2-week period there. All right, are they going to make new contract highs here and just keep pursuing this? Some folks have had some pretty astronomical predictions on the upside.
Well, they're going to make one more new high, in my opinion. I think your April contract will get up to 83, and possibly the June contract will trade up here to about, let's say I have about 102 target on it. And then from there, they're going to let the air out of the hogs. They're going to let the air out of the cattle as well, too. We're going to be looking at a very substantial break.
Interesting. All right. Thanks, Dewey, for talking with us today. Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky.